How's it going today, guys? I hope you're having a fantastic day, and I hope you've had a great week so far. In this video here, we're going to be talking about a stock called UnitedHealth. I am very glad this stock was brought up here for analysis because it is a stock that is in the healthcare sector, and it's a sector that oftentimes people overlook just because there's more exciting names out there, and this is kind of a boring investment. But I'm hoping that after you guys see this video here, you understand why a stock like UnitedHealth really does belong in any well-rounded portfolio. It doesn't necessarily have to be this exact healthcare stock, but that is definitely one of the cornerstones of a well-rounded portfolio, is having some exposure to healthcare. But let's go ahead and talk more about this company and get into more details on UnitedHealth. So first of all, just a little overview here. The symbol is UNH on the New York Stock Exchange. They currently have a price to earnings ratio of 23.4, a dividend yield of 1.4%, and they've been paying that dividend for 17 years. However, they only have a 7-year growth streak on that dividend. They're a massive company, the largest medical insurance company. They have a massive market capitalization of $245 billion. They are a blue chip stock, and they are a component of the Dow Jones Industrial Average. The type of investment this is, it is definitely a blended investment of both growth and income, and this is a 41-year-old company. So a little bit more background here on UnitedHealth. UnitedHealth is a diversified healthcare company operating in the United States, and they are one of the largest healthcare companies out there with over 285,000 employees. Now, UnitedHealth operates through 4 different segments. You have United Healthcare, Optum Health, Optum Insight, and Optum Rx. And United Healthcare offers health benefit plans, basically health insurance. Oftentimes that's some kind of employee-sponsored healthcare plan. Optum Health offers health management services, provider of networking services, financial services, and more. Optum Insight offers healthcare software and information products, and Optum Rx offers pharmacy programs and services. So that is a little bit of background there on what this company is and their 4 different operating segments. So now let's go ahead and talk about the valuation of this company. And usually, like I say, I don't really pay attention to what analysts have to say about a stock. But right now, every single analyst that has put out a rating on this stock has rated this as either a strong buy or a buy among 22 different analysts out there. And it's 11 rating it as a buy, 11 rating it as a strong buy. And so this gives it a very strong recommendation here of as far as a buy goes, if you're somebody who pays attention to what analysts have to say. And I tend to make my own decisions about stocks, but it is good when analysts are on your side. That way, when maybe they upgrade their opinion on a stock, you're going to get a bit of a lift there. And so I like seeing analysts being bullish about this stock. And the other thing I like to look at is the analyst price target for the stock. The average price target is $283.70. As of today, it was $252.76 per share, and that implies about a 12.2% upside for this stock. So now let's go ahead and talk about the actual valuation of these shares. And there's a number of different companies out there we could compare this company to. We have, first of all, UnitedHealth, we have Aetna, we have Cigna, CVS Health, Walgreens, and Humana. So we're going to go ahead and look at the valuation of these 3 stocks to give you an idea of where UnitedHealth is falling. So of all these companies here, UnitedHealth has the highest price to earnings ratio at a 23.4, and CVS Health has the lowest at a 13. And that is a stock I would love to analyze here in this group as well. So maybe we can get that one on one of these weeks here and we can talk more about CVS or Walgreens. But in terms of the PE, the earnings multiple, UnitedHealth has the highest earnings multiple at this point in time. Now looking at the forward PE, UnitedHealth comes in at a 17.6, CVS comes in at the lowest forward PE of an 8.9, and Humana comes in with the highest forward PE of an 18.8. So UnitedHealth does have a higher price to earnings ratio, and they do have a higher forward PE than some of the peers do. And then looking at the price to earnings to growth ratio there, UnitedHealth comes in at a 1.3, Aetna has the highest at a 1.7, and CVS Health across the board has the lowest price to earnings to growth ratio. So it's definitely a stock I'm going to actually be looking into myself, and I'd love to analyze it in the group. It hasn't been on my radar previously until I compared it here to UnitedHealth, and I noticed, okay, that's a fairly attractive valuation just looking at the earnings multiple, forward earnings multiple, and that PEG ratio. But this kind of gives you an idea of where UnitedHealth falls here. They're certainly not cheap. but they're not the most expensive stock there among their peers. They're probably in the maybe the upper 40%, somewhere around there. So they're not overvalued, but they're probably fairly valued at this point in time compared to the valuation of their peers. So this is something I wanted to cover as well too quickly. A lot of people are not familiar with insurance companies and how they're actually making money, but this is how UnitedHealth is making money. So UnitedHealth collects an insurance premium from policyholders and the employers. So usually how that works is if you are a full-time employee, you get benefits. Some of those benefits include some kind of health plan or health coverage, and as such you pay a weekly or monthly payment, and then your employer also pays too. Usually your employer is actually paying more, but that is your insurance premium paid to the private health insurance company like UnitedHealth. And the goal is to collect more in premiums than it spends on healthcare for policyholders. And so an example here of where they would make money, let's say your premium was $200 per month, and maybe you paid $100, your employer paid $100. So they collected $2,400 in 1 year in insurance premiums from you, and you only went to the doctor a couple times, so they paid out $500 in reimbursements. So they made a profit of $1,900 there, but there could be another patient that had $10,000 in reimbursements for a $2,400 premium. So they're trying to have more coming in premiums than they're paying out in reimbursements, and that is how insurance companies make money. Now, large healthcare companies like UnitedHealth are able to leverage their size to negotiate better deals, and this is called an economy of scale. So they have more bargaining power with doctors, medical facilities, medical suppliers, because they have millions of patients. And that is one of the major things here that actually isolates this company from the competition, is that if you were looking to enter the healthcare space and be a healthcare insurer, you would have a very difficult time competing with large healthcare companies like UnitedHealth, because they're able to bargain based on their volume, based on the number of patients they have, and you would be unable to do that. UnitedHealth also offers discounts on preventative behaviors such as quitting tobacco and fitness memberships, because obviously if they have their policyholders stop smoking, that's going to lower their costs as far as what they're paying out for reimbursements. And if people are going to the gym, they're going to be going to the doctor less. And basically your risk level as a policyholder determines the insurance premium that you're paying. And so if you're a 65-year-old smoker, it's probably going to be higher than a 20-year-old who has never smoked and regularly exercises. So that's kind of a background on how UnitedHealth is making money. So now let's go ahead and talk about the pros of investing in this stock. And right now, the first thing we have to talk about is the fact that unemployment is very low right now. And most full-time employees have health insurance as part of their benefits package. And as we said, the more policyholders they have, the better the deals they can negotiate, and they're also making more money by having more policyholders. So that is one thing you have to realize about a private healthcare company, is that when unemployment is low, they have more policyholders. When unemployment is higher, they have less policyholders, because you have less people employed, less people receiving those benefits as being a full-time employee, and then you're going to have less people having private healthcare insurance. But right now, unemployment is very low. At the bottom left there's a chart, and back in June of 2016, it was a little under 5%, and now we're looking at about 4% unemployment. So it is very low right now, which is great for companies like UnitedHealth. Moving on here, another pro is that people are living longer than before, and the aging population is in need of more health care. They have more prescription drugs, they have more frequent visits, they have preventative care, and so when you have an increased aging population, you're going to have a stronger demand or a greater demand for health care. And this was a statistic here, this was back from June of 2017, but it's probably still fairly accurate. The nation's population has a distinctly older age profile than it did 16 years ago, according to the new U.S. Census Bureau population estimates released today. New detailed estimates show the nation's median age, the age where half of the population is younger and the other half is older, so right down the middle, rose from 35.3 years on April of 2000 to 37.9 years on July 1st of 2016. So the median age has gotten, just about a little more than 2 years older. And then we also see here that residents aged 65 and over grew from 35 million in 2000 to 49.2 million in 2016. accounting for 12.4% and 15.2% of the total population respectively. So they are now accounting for a larger percentage of the population. And as we said, these older people are going to need more health care. And that, again, is going to be good for companies like UnitedHealth because they're going to be able to have more policyholders and they're going to be able to make more money in the process. Another pro here is that healthcare is paid for by government programs, private health insurance plans, and then funds of the policyholders. So usually if you do have some kind of employer-sponsored healthcare plan, you contribute some each month, and so does your employer. But there are also government programs such as Medicare and Medicaid that are government funded, and these programs are also funding UnitedHealth and allowing people to have healthcare plans. So they have consistent government spending ending up in the pockets of UnitedHealth. So that, again, is another good thing here for UnitedHealth. But that's one of the things we're going to be talking about later on as a con, is that possibility of some kind of reform of the healthcare system. That's always been the biggest threat for healthcare companies. And then one of the biggest pros, in my opinion, here is that UnitedHealth is in a great position to increase that quarterly dividend just looking at the numbers here. So this is the revenue and earnings per share for fiscal year 2016, 2017, and 2018. And I always like to look at that dividend coverage ratio. So in 2016, the coverage ratio was a 3.05, and usually I like to see, a 1.5 to a 2, and so they could actually afford to raise that dividend quite a bit. And in 2017, the coverage ratio was a 3.7. So I think that UnitedHealth is in an excellent position to increase that quarterly dividend and become even more of an income investment for shareholders. Moving on now, let's go ahead and talk about a couple of cons I have here. First of all, healthcare in the United States is very expensive. It's, I believe, more expensive here than anywhere else in the world, and healthcare costs are on the rise. So government regulation and healthcare reform has been a threat to private healthcare companies for years. This is nothing new, but it is still a threat. And also the public opinion of health insurance companies is pretty poor just because of the rising healthcare costs, your insurance premiums, and things of that nature. And healthcare reform would aim to reduce healthcare costs and reduce the profits for private healthcare companies. So if we did see any kind of widespread reform, that would probably hurt a company like UnitedHealth being a private insurer. And then the only other con I have here has to do with unemployment, like we mentioned earlier. Health insurance is often offered by employers, so as unemployment rises, the number of policyholders decreases. And so health insurance is somewhat tied to the underlying economy, giving it a cyclical element in that, because when you have less people employed, less people have health insurance. And just to give you guys an example here, this was UnitedHealth stock back in 2008. We know that was the whole housing market crash. Unemployment went through the roof. And as you can see, that stock went from $56 a share in late 2008 down to $15 a share about a little bit over a year, maybe a year and a half later. So they fell substantially. And again, that is due to the fact that, well, the whole market collapsed, but also because unemployment was so high, there were less people that had health insurance, and that hurt this company. So what are the barriers to entry that protect UnitedHealth from the competition? Number one, the biggest one, is the economies of scale. UnitedHealth has the bargaining power because they have so many policyholders. Number two, government regulation. There is a massive amount of government regulation involved with private healthcare, and they're also getting government spending through the federal healthcare options out there, Medicare and Medicaid, and also the technology and data this company has. They have so much data on past patients, and as far as their models for figuring out insurance premiums, they have a lot protecting them from the competition and new entrants into the health insurance space. So moving on now, let's go ahead and take a look at the balance sheet for UnitedHealth. Total assets have increased every year since 2014 at an average rate of 17.5% per year. Very strong growth of total assets. Even more impressive, cash and cash equivalents have increased 59.9% from 2014 to 2017. So in the last 4 years, they are up massively in terms of the cash they have on hand. Total assets grew 12.7% over the last 4 quarters. Cash and cash equivalents grew 25.1% over the last 4 quarters. And so what we are seeing here is that total assets have grown consistently at a double-digit rate, and the cash pile is growing too. And as of the most recent quarter there, we can see that UnitedHealth is sitting on about $18.2 billion in cash. And so that is oftentimes how this company has grown, is acquiring other smaller healthcare companies. So seeing them sitting on that much cash, they probably are preparing for some kind of acquisition down the road so they can grow their customer base and have more policy holders. Moving on, let's take a look at the liabilities. UnitedHealth has very little short-term debt, but a fair amount of long-term debt. And long-term debt nearly doubled from 2014 to 2015. This was probably some kind of acquisition where they took on some debt. And so total assets have adequate coverage of total liabilities at a ratio of 1.44 to 1 in Q1 of 2018. Like I've said before, I like to see, a 1.5 or higher in most cases. So they do have a substantial amount of debt here, but it's nothing that's unmanageable. And the one thing that I did notice, my one criticism here, is that total liabilities grew 13.8% over the last 4 quarters compared to 12.7% growth of total assets. So liabilities, the debt grew a little bit faster than the assets. I would always like to see asset growth outpacing debt growth, but it wasn't a huge difference by any means. And we did notice that long-term debt grew 11.4% over the last 4 quarters. So UnitedHealth has a sizable debt load that grew slightly faster than assets over the last 4 quarters. Moving on, let's go ahead and take a look at the income as well as the cash flow. Total revenue has increased every single year at an average rate of 15.6% per year, double-digit growth of total revenue. Gross profit, on the other hand, has increased every single year at an average rate of 25.6% per year. So when you see gross profit outpacing total revenue, that is a very good sign. That means that the profitability and profit margins are improving. However, when you look at 2016 to 2017, total revenue increased 8.8%, while gross profit increased just 4.9%. So we did have a slight decline in gross margin and profitability in 2016 to 2017. Again, one minor criticism here looking at these numbers. Net income has increased every single year at an average rate of 24.9% per year. Net income increased 50.5% from 2016 to 2017, and net cash flow from operations has increased every single year at an average rate of 20.1% per year. So this company is experiencing very strong growth and great numbers across the board here. So if we take a look here at the financial ratios, you can see gross margin declined slightly from 37% in 2016 to 35% in 2017. And something else that you might find interesting here is that their profit margin is very low, but that's typical of insurance companies, of healthcare insurance companies. They're not making, crazy profit margins here. They're making a very small amount, and that's typical across the board. So their profit margin is 5%, and over the last 3 years it's been just 4%, but that is actually the norm among these health insurance companies. So UnitedHealth stock is up 32% over the last year compared to a 16% return from the Dow Jones Industrial Average. So they have basically doubled the return from the Dow over the last year, significantly outpacing the return of the index. And over the last 5 years, UnitedHealth stock is up 250.1% compared to a 61.1% return from the Dow Jones Industrial Average. So it outpaced the index over the last year and over the last 5 years. And the one thing I will say here is that every well-rounded portfolio needs exposure to the healthcare sector, and UnitedHealth is a fine choice for a long-term investment. And again, like I said, this is a stock that oftentimes gets overlooked because people are busy talking about the Netflixes out there and the Roku stock and the Amazon stock, but really this is a fine company that I'm glad was brought up here, and I'm glad I can bring some attention to it because it is a fine investment for a long-term investor, and you definitely need some exposure to the healthcare sector in your portfolio. But again, like we said, UnitedHealth has had quite a run up. That's also indicated looking at that valuation, but I believe this company still has room to grow. UnitedHealth has something to offer both the income and the growth investors, and with a beta of 0.75, this stock is a suitable pick for beginners, with low volatility being less volatile than the overall market. And then finally, let's go ahead and go over some of the results from the Q2 2018 earnings report. First half 2018 performance illustrates strong execution on this path compared to last year's first half. Revenues of $111.3 billion increased 12.7%, strong growth in revenue there of $12.5 billion compared to that same time frame a year ago. Adjusted cash flows from operations grew to $7.2 billion, and adjusted net earnings grew 28.2% to $6.19 per share. Very strong growth of earnings. For the full year, our outlook for adjusted net earnings per share is increasing to a new range of $12.50 to $12.75 per share. So they are increasing their forward-looking statements. And we expect cash flows from operations for 2018 to approach $15.5 billion, which is the upper end of our previous guidance. So it was a very strong quarter for them in the most recent quarter. But anyways, guys, that's going to wrap up this video here. I hope you enjoyed it. I would love to talk about another healthcare company, maybe CVS or Walgreens, so maybe we can get them up for a vote one of these weeks. But anyways, guys, that wraps up this video. Thank you for watching, and I will see you in the next one.